Welcome to Moneycontrol. Our stock for the day is Indian Noodles Company. The company posted its best ever quarterly sales in the quarter gone by. If we see the RevPAR, that was 28% above the pre-COVID levels, led by higher pricing due to the strong demand scenario. If you see the margins, the company reported an EBITDA margin of 35%, which is about 650 basis points above the pre-COVID levels. So the company has reduced the fixed cost structure and hence states that the margin improvement is sustainable. Now the demand scenario continues to remain strong. While the leisure demand is strong, the corporate and the business demand is also picking up. The company stated that the strong trend which it saw in the 9 months FY23 period is being witnessed in quarter 4 as well. If you see for the next fiscal, there are some triggers which will keep the demand momentum strong. India is hosting the G20 presidency, which will see a lot of international delegations visiting our country, which will boost the hotel demand. Also, India is hosting the Hockey World Cup, which will also see the demand for hotels going up. Also, if you see, the international travel is not yet back to the pre-pandemic levels, and which is likely to come in FY24, which will keep the demand momentum strong. If you see, the company is tapping the strong demand by creating an additional capacity of about 30% rooms. So in the room addition, about 70% of the rooms will be under the management contract route, which will help the company to expand the operations significantly without putting much of a stress on the balance sheet. If we see, the new businesses are scaling up quite nicely. Human, which is the food delivery business, the company is expecting to raise the store count from 25 to 35. If we see the AMA business, which is the bungalow stays, the company has already reached 108 locations and aims to reach about 500 locations over the next few years. So overall, the company expects to increase the occupancies as well as the room rates from the current levels. If you see the demand supply scenario in the hotel industry, it is favorable. The demand is expected to be far exceed the supply in the next 2 to 3 years. Supply, if you see, is expected to lag as a lot of smaller players have shut operations. They were severely affected in the times of COVID-19. And any new supply would take about 2 to 3 years to come up in the system. So, Indian Hotels has a good brand image as well as a strong balance sheet. At the current market price, the stock is trading at an EV by EBITDA of 23 times its FY24 projected earnings.